Is Nvidia the most powerful stock in the tech world? Goldman Sachs thinks so. Investors anxiously await Nvidia's quarterly earning reports, as they can significantly impact the entire market. In the US, there's so much excitement about Nvidia that some pubs have even started EarningsWatch parties. Why is there such a buzz around this stock? Let's hear more from Viswanath, Deputy Editor, bl.portfolio.
If you've been following stock markets, you need no introduction to Nvidia. Nvidia has been the fulcrum of the AI rally, which in turn has been driving the overall global market rally for the last 1.5 years. If you actually look at the way things have panned out over the last 1.5 years, the importance of Nvidia has only grown more in size. When we first wrote about Nvidia in May 23, we had highlighted how the company had actually set a new paradigm when it comes to the AI journey that we've all embarked on. Since then, the global stock markets have rallied substantially. The Nasdaq composite, which is actually the bellwether for technology stocks, is up 50%. To give you a perspective of how Nvidia is to global stock market wealth, let me run you through what happened in the first 2 weeks of September. If you actually recollect, or if you had followed the markets, the first week of September was a pretty bad week for global stock markets, including in India. More so in the US, the S&P 500 dropped 4% in the first week of September. Investors lost $2 trillion. S&P lost that in just 1 week. And Nvidia fell 14%. And Nvidia on its own lost 400 billion in market cap. That's almost the combined market cap of Reliance Industries and TCS combined. All right. So this is what happened in the first week of September. And then in the second week of September, the global market started on a cautious note. And actually on Wednesday, the second Wednesday of this month, the markets were down pretty heavily. This was after the core inflation in US was actually slightly above estimates. We all know the Fed has cut interest rates by 50 basis points today, but I'm going back to a period prior to that. And this was the Wednesday in the second week of September. Markets were down heavily as US CPI inflation data. Well, broadly in line, the core inflation was slightly above estimates. And it was looking like the day would end deep in the red. And in the afternoon, something happened. And the markets rallied. And from there on, global markets, including in India, have been hitting new highs. What exactly happened on Wednesday was just this. Jensen Huang, the CEO of Nvidia, spoke at a Goldman Sachs technology conference, and he said how good the business for Nvidia was. Just few comments from him in the afternoon of that day triggered a global rally in stocks, and that has sustained till today. Just few words, comments like demand is great, customers are banking on us, and the customer relations are tense. Tense because everybody wants Nvidia's GPUs. So, and these kind of positive comments from him gave a sense of confidence to many that the AI business is quite intact. This gave a confidence to markets because till a couple of weeks back, there were some doubts whether the AI rally is faltering. Actually, if you see, the AI rally has now has diverged, with some companies falling significantly from there, and with some continuing to trade closer to their all-time highs. And so initially, early part of this year, many companies were actually piggy banking on this AI rally. Now the markets are getting more focused on real beneficiaries, and Nvidia is of course at the fulcrum of the AI rally, because the current AI infrastructure is not possible without Nvidia's GPUs or graphic processing units. So Jensen Huang in a speech gave a sense of how strong the demand was. And this gave a lot of confidence to the markets that the big technology companies are going to continue to invest extensively in Nvidia's GPUs and are betting big on artificial intelligence. So this should give you some idea of how important a single company is and how important the words from its CEO are. So the second week of September, S&P completely recouped the $2 trillion it lost. Nvidia completely recouped the $400 billion in market cap it lost, and the markets have continued to rally post the Fed rate cuts. Interesting thing to note, if you actually see the day the Fed cut rates by 50 basis points, the markets were slightly down. But the day Jensen Huang spoke, the markets rallied close 2 to 3% from their lows of the day. S&P 500 was up 2.75% and Nasdaq was up 3.75% from lows of the day. So when you see or connect the dots, it looks like market is viewing comments from Nvidia CEO more important than views and comments from the US Fed. That's actually a bit hard to digest, but that's the mood of the market right now. So if you actually see how much Nvidia sways the market in terms of trillions of dollars of market capitalization being created or destroyed according to the way Nvidia moves, here is one more interesting statistic which you can see in this chart. Year to date, we've had over 180 trading sessions. Nvidia's correlation with S&P 500 and Nasdaq Composite is 0.96. That should give you an idea of how strongly it is, how strongly the indices depend on Nvidia actually. See, when it comes to correlation, you can say, does the stock depend on the index or the index depend on the stock? But when you see the markets moving on the comments of Jensen Huang and not some broad commentary on the markets by the Fed governor or anyone else, I think we can make the inference that markets depend on Nvidia and not the other way around. And if you look at the chart, you can see that amongst all the Magnificent Seven companies, Nvidia's correlation is significantly higher than any other company, including that of Microsoft or Alphabet or Apple. So overall, this should give a picture of how much depends on Nvidia.
In our recent article, few months back, we had mentioned how never have so many depended so much on so few, or rather just one company, Nvidia. A lot of global stock market wealth depends on how Nvidia is faring. How and why?
Do rich people beg? I mean, rich people need not beg because they can buy what they want. But what if what they want is in short supply? Two of the richest people on earth, Larry Ellison of Oracle and Elon Musk, both of them recently met Jensen Huang for dinner and begged him to supply them with GPUs, or Nvidia's graphic processing units. If you actually look back and see why Jensen Huang said customer relations are tense, this should give some color, because this is exactly what Larry Ellison said in Oracle's analyst meet a couple of weeks back. So they are literally begging Nvidia for GPUs. So one thing is clear, this demand is very strong for now and is going to sustain for the next few quarters for certain. Besides people saying, we can also look at what companies are doing. If you look at the chart, we have given a color on how much the capex of the big technology companies has been increasing over the last few years. And if you look at the last line, you can see that at the start of the year, the capex of the Magnificent Seven companies was estimated at around 200 billion for this year, for calendar year 24. Into September, after the second quarter results of most of the companies, the capex of just 4 companies, Microsoft, Alphabet, Meta Platforms and Amazon, has gone up to $211 billion. They're expected to spend $211 billion in capex in this year. It's a substantial increase from what these 4 companies were estimated to do at the start of the year, and a significant increase from what they did last year also. And most of it is going into Nvidia GPUs. They want to build large hyperscalers where they and their customers can do development of large language models and AI inferencing models. Jensen Huang, in an interview last year, said how Nvidia started focusing on designing for GPUs 10 years back. So this was last year, so sometime in 2013, they had realized the potential for working on GPUs. while rest of the large players like Intel were focused on CPUs. And as their technology developed and AI teams started gaining traction in calendar year 21 and calendar year 22, Nvidia's business boomed. And because they were way ahead of their peers, their product was the best when it comes to needs of artificial intelligence infrastructure. And hence, big companies are begging Nvidia for GPUs. Besides this, there are many views, opposing views, that competition will catch up with Nvidia. Probably some competitors can have a quicker development time frame, although it's challenging. Development time frames in semiconductors are very long. But even if we are to assume that some competitors like AMD can develop in shorter time frame, they've already come out with their chips, but customers still prefer Nvidia over it. There is also another strong moat that protects Nvidia's current business, and that is CUDA, which is Nvidia's computing and application performance interface that overlays all its GPU chips. So how this builds a moat for Nvidia is this. Customers buy Nvidia chips, which comes with CUDA. And large language model training is done on these Nvidia chips on top of the CUDA application. And AI inferencing applications are developed and built on top of the same CUDA. Now, a lot of companies have spent millions of dollars, if not billions, on developing their AI applications on this particular ecosystem developed by Nvidia. A new competitor can come with a chip, but then if customers will have to shift to a different computing platform other than CUDA, they might be hesitant because it's going to increase workloads, it's going to increase expenses for them. To understand this better, look at how, although there was good alternatives to Windows, it's not like every one of us have been happy with the performance of Windows, but we've always been hesitant to shift to a competing operating system. Same thing if you have an Android phone, you're comfortable with it. If you have an iOS phone, you're comfortable with it. So one is from a user perspective, you don't want to shift. Same case with customers of Nvidia GPUs also. And on top of this, when applications are built, it's difficult for a new competitor to come and then developers will again have to build the application. This will happen. I'm not saying that Nvidia GPUs and CUDA is going to be the only game in town, but it can dominate a lot the way certain technology companies have dominated ecosystem in the past, purely because of their first mover advantage and how customers have actually adopted because this was the first product in town.
So far so good, but how long can this boom last? Will it continue for now or can it falter?
So what are the risks? We can safely conclude, as I mentioned, competition as of now is not a risk. Demand as of now is not a risk. So the risk for Nvidia can stem from global macros. The global macro risks, how it can impact Nvidia is, if you actually see, like I mentioned earlier, a significant part of big tech's capex of the top 4 technology companies' capex of over $200 billion is spent on building hyperscalers, which is AI or artificial intelligence data centers. All right. Now, as of now, they're not getting any great return on investment on these investments, but they're happy to invest because their core businesses are flourishing and their cash flows are quite high actually. So they're left with billions of dollars from each year's annual cash flows, even after spending $200 billion on building hyperscalers. But when that can come into risk is when, for some reason, their revenue gets impacted. Like what happened in 2022, if you see, was a terrible year for technology companies. Meta fell over 70%, Netflix fell over 70%, Microsoft, Apple, all companies fell a lot, 30 to 50, 60%. They fell. The Nasdaq went deep into bear market territory. All this happened in 2022. One common thing across was their revenues were impacted. For many companies, revenues were flat to declining. And so when that happened, they had to rush to cut costs, which is why Meta, if you actually see, embarked on a year of efficiency in calendar year 2023, which paid rich dividends for them. For some reason, if there is a global macro slowdown and the revenue model gets hit, and these companies are yet to deliver any reasonable return on investment on their artificial intelligence build-outs, at some point of time they may be compelled to cut their investments in artificial intelligence. We are not saying this is going to happen. We are saying this is the risk that you will have to watch out for, because it can happen quickly. If you go back to the dot-com boom, Cisco was exactly where Nvidia is today. Cisco was the fulcrum of the global internet boom. Their routers were core to enabling internet infrastructure across the world. But Cisco's revenue model took a hit when there was a global slowdown, which started with the US recession. And Cisco was a $500 billion company in 2000. Today it's substantially below that. So if you had bought Cisco at the peak of the dot-com boom, you lost money actually. So during the same time, if you had bought the index, you would have actually made quite decent money. Nasdaq, from its peak of around 5,000 in 2000, has moved up to 18,000 now, whereas Cisco has lost money for investors. So that is one potential risk that you'll have to be aware of if a global macro slowdown impacts spending of the big technology companies. We did see the revenues of tech companies taking a big hit in FY22. If you are an Nvidia investor, you have to wish it doesn't happen for the foreseeable future. So that is one thing. And then the second thing is geopolitics. Nvidia is a fabless company. By fabless company, I mean they design their chips, they don't manufacture their chips. Manufacturing of chips is outsourced to a foundry called Taiwan Semiconductors. All right. Now, Taiwan Semiconductors has most of its manufacturing plants in Taiwan. Although they too are trying to de-risk by building plants in the US right now, it's a long drawn process. And geopolitics is another risk that investors have to watch out for, because although nothing is happening as far as China and Taiwan is concerned right now, China keeps making some noises, and it's a belligerent country, and that is something that one always have to watch out for. Any escalation of Taiwan and China tensions can have massive ramifications on global chip stocks and Nvidia. Why on Nvidia especially is because so much of investor confidence is built into the stock. So what has happened with Nvidia is even fund managers who were earlier underweight Nvidia, they have actually underperformed the benchmark, because Nvidia is such a big part of any index or any benchmark. And by underweighting Nvidia, investors who are underweight have actually lost out on wealth. And so many have had to do catch up as far as adding Nvidia into their portfolio is concerned. And there is a lot of retail craze also for Nvidia. So this is how the ramification can play out. Either a slowdown in revenue of the big tech companies, which account for anywhere between 40 to 50% of Nvidia's revenue. This is either direct purchases from Nvidia or indirect purchases from Nvidia's partners, or any issue as far as geopolitics. Another issue which can play out in the long term but not right now is regulation, but as of now it doesn't seem to be a threat. Nvidia in a way represents a paradox, a company with the best of fundamentals. You go back to the dot-com boom, no company, including Cisco, had such strong fundamentals. To give you a perspective, while Nvidia and Cisco are compared in terms of how they are core to the development of, like Cisco was for internet infrastructure and Nvidia is for artificial infrastructure, the numbers are quite different. For example, Nvidia's profit margins is 55%. After meeting all its expenses, after paying taxes to the government, Nvidia makes 55% of every rupee it earns as profits. You can dig through countless screeners. It would be very hard to come across a company with 55% net profit margins. That reflects how strong it is and how different its position is from that of Cisco in Cisco during the dot-com boom. So fundamentally a very strong company, but the paradox is so much is linked to it. It's almost like Nvidia is the atlas that is lifting up global stock markets.
From this, we can infer Nvidia's business fundamentals are bright and unlikely to falter. But what are the risks?
So whenever anything gets too important, it captures the fancy of market participants even more. That makes it even more important. Eventually, there is kind of a self-breaking system in global markets that kind of makes these things hit a brick wall. So we'll have to wait and see how this plays out.